All right. What's up, everybody? Hope you guys are doing great. It's Monday night, open hours, open office hours. Everybody having a good time. Hope you guys are all doing great on this evening. We're going to get rolling tonight with our session. So I got a bunch of you here tonight. So good to have you here with us. For those of you that don't know, Chuck Fulkerson here to really just spend some time talking about what's happening. So we got Mr. Corey Lane joining us this evening. So what's up, brother?
What's happening, party people? How you doing, Charles?
Living the dream. Living the dream. So tonight, tonight we have got we got a couple of you. We already had somebody leave. That hurt my feelings. Corey. Somebody already left. It really hurts. So tonight we're going to go through, I figured we would do an open office hours and do a Q&A and just kind of review what are our thoughts on the market, take a look at a couple positions that we've talked about. And I figured that this evening, that would be kind of the best things for us to look at from a trader's perspective and see, is there, are there good opportunities now as the dang thing? I'm pretty sure the market is just never coming down. Like, I'm just
you just jinxed it. It's happening tomorrow.
Coming down again.
You just jinxed it. You screwed us up.
I know. It's my fault. Oh, I forgot to ask you, what are you drinking? What's your beverage this evening?
Well, I got a little black cherry Waterloo.
Okay.
But I also have a little Casamigos, maybe?
Oh, that is House of Migos.
Mm-hmm.
You like that? I have Whistle Pig Farm Stock Rye. So that's
very nice.
That's my jam. So,
hey, Chuck, can we test something before you jump right into stuff?
Yeah, let's do it.
So not only did we turn off the ability for people to turn their videos on and their microphones on and draw all over Chuck's screen, but we also
draw lewd images.
We also had an issue last time, I think, was somebody direct messaging other people in the room and was annoying, and who knows if they were more than annoying, but we turned it on so that you could only message co-hosts and hosts. So Chuck and I. What I'm wondering is, Ian just typed in "good evening" and it came in as a direct message. So I'm wondering if everybody else can see. Somebody put something in the chat box. I want to see if everyone can see it in the meeting room or if it's only a direct message. And the reason I asked that, Charles, is because they're all coming in as direct messages, which means you guys can't see it. So Chuck, anytime somebody has a question, we have to read the question off.
Good idea. We will do that. So
that's what I was wondering. All right, so fantastic.
We got one already, which is great. Liz says, any thoughts on why volume was so insanely light today? So pulling it up. Oops, I don't want volume confluence. That's not the right one. All right. So, volume today was the lowest it's been in about a month. It actually might be the lowest volume day of the year. Pretty close to it. Very close to it. Actually, no, I think it's the lowest volume day of the year. I don't have a great answer for that, Liz. I didn't really look into it all that much. Yeah, spring break, Kevin says. That's a good possibility. It could have something to do with the fact that it's a Monday, but I genuinely don't know what caused the low volume. Corey, any insights on your thoughts?
No, I'm trying to imagine why there would be low volume today. I mean, it's not like we've not had volume this low before, but it's definitely probably only about 5% of the time do we have volume this low.
Yeah, I mean, if I just put a line at today's volume on today's volume bar and extend that to the left, this would be the lowest volume day since November 24th. So since the half day.
You had 3 of them about a month ago. You had
I had 3 like right around the same number, but I think today was a little bit lower. But point is, you're right. I agree, Liz nearly dozed off at her keyboard in the early afternoon. I can see why. But I mean, looking at our candlesticks the last couple of days, what do you notice about our candlesticks the last few days, right? Looking at our spiders candlesticks in general, right? I mean, these are fairly bearish narrow range candles. Fairly narrow narrow range. Oh, she literally did doze off. That's awesome. Fairly bearish narrow range candles the last couple of days after a gap up on Thursday. Friday we opened and closed on the low. Today we opened and closed at basically the same price. Tried to rally up and were unable to do so. So if you look at that on more of an intraday basis, you'll see that there's a case to be made that the markets could give us a pullback over the next couple of days down into this region. Just looking at the spiders, these are not the S&P futures markets by any stretch of the imagination, but looking simply at now, if I add the futures markets to that, you basically have clean air from 52.40 up to current price. So if we do get much lower, then the thought would be that that the markets would come down and fill this area in here, which I got to tell you, I would be happy with, because to me, that's when you go shopping. Corey and I have talked about this before. Like, it's hard to find deals in the market. And when I say find deals, am I buying things on sale? It's hard to buy things on sale in this market condition. It really is. The last couple of days have been a bit more helpful. Overall, the last couple of days have been a bit more helpful. But in reality, it's really hard to buy things on sale. I keep hoping to see the market pull back, if not just a little bit, to buy things on sale. And you're just not getting that, right? You're even to here would be considered a bargain at this point, and that would only be a pullback off of the high of 1.5%. So the market's definitely not giving a lot of discounts.
No. Chuck, do you think that I think the market is closed this Friday, correct?
Yeah, Good Friday. I think we're closed on Good Friday.
I wonder if it has something to do. I wonder if the low volume too has something to do with it'll just be a low volume week because it's a short trading week. I don't know.
Yeah, I think that's a strong possibility.
It's also the end of the quarter.
Could be, yeah, end of the quarter. Liz says feels like it's basing to go higher. I can't disagree with that, Liz. If you look at this on a weekly chart, it's just, I mean, we have, but this has been gangbusters, right? If you go back and look at this market on a weekly chart, and let's go back a little bit further, right? Let's do 10 years. And it's hard to find any move up that was sustained at this angle, right? If I leave just this angle on here, even coming out of COVID, our angle, I guess coming out of COVID, our angle was a bit steeper for a little while, right? But beyond that, I mean, it's hard to find an angle that is as steep as what price has been recently. Now, I don't know. I'm not here to say, well, we're going to get a 20% pullback out of this, but mathematically, I say mathematically. I guess mathematically it can go up as long as it wants, as long as we continue to print money and keep putting that money into the market. Logically, our anticipation would be that it would come back at some point. But I think the thing to remember when we have this kind of a straight up market is that markets don't typically have V tops, right? They don't normally have these V pointed tops. They have V bottoms, right? V bottoms and more rounded tops, because I've always looked at it as accumulation and distribution. If you've got a lot of stuff to sell, you want to keep the price high enough that there's going to be enough people out there to buy it. So your distribution is going to take a little bit longer. If you want to buy it, you want to buy as much as you can, as low as you can. And so your accumulation can be oftentimes much more violent, which is why I think you've got more V tops, V bottoms and rounded tops. So I'm not anticipating a market to just come straight down, right? I don't think that oh no, we've gone up so far, now we're gonna come screaming down like this. I don't anticipate that. Is it possible? Maybe, but I think we'd be more likely to see it base for a few months before then a slower pullback into a better demand area. Thoughts on that, Corey?
Yeah, I'm just looking at the monthly chart on the S&Ps, and I think obviously looking at the dailies, I think it is setting up for a breakout. Hard to imagine, but I think it is. So I agree with you and Liz both. But a pullback of about almost 8.5% only takes us to the all-time highs from what was that, 2022?
Yeah.
Like those highs. So, and I could see a pullback of that magnitude, or maybe even all the way down to 459 on SPY, which would be 12%. Now that'll feel like the end of the world while it's happening. However, 8 to 12% is not really the end of the world.
Well, and I use the 20 period weekly moving average as kind of my base, right? My 8 and 20 moving average is in my mind is really the base. And right now, the market at its current price is, well, let's go from the high. From the high, we are about 7.7% away from that 20 period moving average. I use that 20-week moving average as time to go, time to go, time to go. And then the 8 period exponential as, okay, let's get back in and retest the waters. And so the more we get a rounded top, that gives it time for the 20 period weekly moving average to catch up to current price. I don't love it when we're this far extended away from it, because that means that I've got to take a lot more heat on a pullback. But if you take a lot more heat on a pullback, it's because you gained a lot more on the way up.
Yeah, and if you draw trend lines around the monthly chart, around the big monthly chart, long term going back to 2020, there's a strong chance that we're getting to 600 on the S&P. Because we're about 50% of the way through the lower rising trend line and the upper resistance trend line. I doubt we'll do it in one straight shot, but a pullback to 460 could very easily send us right up to 600 on the SPY.
Yeah. Yeah, I
And who
can
doesn't
see that.
think the market's going to try to be propped up through the election at least?
Well, I mean, there is definitely an argument to be had that the markets have a better chance of being propped up through the election than not. And so I think we're going to be better off, as we say, kind of every week, trading the markets in a bullish pattern because until it tells us otherwise. So, well, I figured that today we would take our time to go through some questions that anybody had. So do me a favor, if you've got anything you want us to review. I mean, it's not often you get both Corey and I in the same room together. So if you want to get our opinions or our thoughts on something, type it in the chat box so that we can get it answered. Corey, you said you have the YouTube page up.
Yeah, I do.
Let me know if
Jim,
anybody puts anything in there, because I didn't pull that one up right now after playing
yeah,
my
I'm watching
Whiskey
it.
Glasses song.
I'm watching it. We got a few people in there. Jim Kelly says hi, by the way.
What's up, Jim? Jim's the man, my Canadian friend. All right. Any stocks you're looking at, paying attention to? I found one today that I liked, which you and I talked a little bit about earlier today. I thought Visa was, I like the pullback the last couple of days in Visa, for a potential option sale somewhere down here around the 270s. You can still get paid a pretty decent premium for the risk to reward around those 270, 275 put options. So I like that one today that I saw. That was one that I liked on the list today. Another one that I had. Let me pull up the other one.
Can I point out something on that one as just a
yeah
management consideration? So I like the chart. I like everything about it. The thing that scares me, the one thing that I think you need to pay a little bit more attention to, not you in particular, Chuck, but just in general, because we've gotten bit by this one a couple times, and that is earnings is unconfirmed, but when is it supposed to be? 423?
423.
Okay. Expiration, if you're choosing 419 expiration, is it possible that they confirm those earnings and push them forward to 418 or even 419 before the market opens?
Yep.
And so
we've had that happen.
So when something is unconfirmed that close to the expiration date, and I know that I don't want to own the shares, I'm not selling puts, to own the shares all the time. Sometimes I sell puts just to take the premium. Then it makes it very difficult to manage that. And potentially you could still be right in the trade directionally, but lose money on volatility, as volatility will always increase going into earnings. Well, always is a strong word, but 99.99% of the time. So that's my only reservation about this one. Otherwise, I love the chart. I love the area.
Yeah, I thought that was pretty good. The other one that I liked that was actually paying a pretty good premium today was SPG. You could sell the SPG 145s down here below all this area of demand. Now, this one's a little bit more. Well, let me throw my other moving averages on here. I did actually have a couple of other moving averages on here. And that 145 is sitting right at the 50-day moving average, right? So you've got a nice little pullback just above that 50-day moving average, where you've got old resistance acting as new support and the 50-day. So I thought both of those were worthwhile trades to take a look at for today. If anybody's looking for, some bullish opportunities and maybe some put selling areas, because I want to buy things that are, as the market has pulled back the last couple of days, these stocks have also pulled back. And so if the market rallies and starts to head back up, these then become, I think, pretty good opportunities on both of those. So those were two that I had looked at earlier today that I thought were viable setups.
They look good, dude.
Anything you're looking at today?
Me?
Yeah.
We looked at all the same stuff today.
I know, but I actually didn't hear. I showed those ones to you earlier today, but I didn't hear what you looked at.
AMD 160 puts. We're looking at selling those in the trading room this morning.
Yes. So the AMD 160s.
AMD 160s.
Nice bullish candle here down here at this demand area.
Looked a little more bullish earlier.
It did look a little bit more bullish earlier today. I mean, there's no getting around that. So I'm trying to see if I can't find the rest of these.
Oh, yeah. Liz brought up ACN bull put spread. We didn't enter it today because we wanted to see how the candle was going to kind of end the day at least. And I do like the way the candle ended today, Liz.
Yeah, that's pretty.
Especially if tomorrow we don't get a new lower low and maybe we get a higher high tomorrow. Absolutely would have no issues entering that bull put spread. I do like how it ended though. That's the rising 200 period, right, Chuck, in purple?
Yep. Yeah.
Nice. Yeah, bounce right off that 200. Gosh, it's almost like technicals work sometimes.
Imagine that. I mean, if there's enough people that are using that 200-day moving average as their trigger, then it's going to work every time.
It's a hell of a discount when you can buy at the 200 moving average.
Yeah. That's damn. Wonder what all earnings. I was gonna say, what caused Accenture to take such a big hit, but that'll tell you.
I'll do it. What was the I'm going to go to our trade submission list. I forgot what strikes we were looking at. We were in the 325, 320. So just below
the great demand is this area down here, this 319 by 315. And that demand's positively going to hold because I drew those lines.
And they're green. So
right. I mean, there's no question that those ones are going to hold. I draw the lines, they hold. That's just the way it works.
You know, a little unknown secret is that if you draw your lines in certain colors, the market tends to respond to them, and green is the big one.
That's a good drop of knowledge. So here's something interesting for y'all. This is one of my absolute favorites. One of the things we all know, and hopefully we all realize, there's nothing new under the sun, right? Supply and demand is what it is, and everybody's going to have their own system, right? Everybody's got their own patented system and my strategy and take a look at this, right? Everybody's got theirs. And I've said, how many times have I said that I don't think that there is any one perfect system and nothing new is being invented. But people like shiny new things. And so I want to give you a funny story for you guys to just think about. And I don't know if I've ever shared this story with you. Have I? Tell me in the chats. Have I shared the red sheep in the clouds story with anybody? Have I shared the red sheep in the clouds? Does anybody remember that story? Have I shared that with y'all?
I'm not even sure I know this story. This would be good. Let me get my sweater, light a fire, and get some hot chocolate. Story time.
So I thought you did know this story because I think you were on it when I did this.
Maybe,
So
but
you,
I don't know what
Ian,
that. I don't know that title. Like maybe.
Ian says, "Do I need more rum?" No, you don't need more rum for the red sheep in the clouds. So I started a website many years ago, which was very ironic. I was running an online trading academy campus in Phoenix, Arizona, and I was doing a radio show once a week called the Power Trading Radio Show. And I owned the website powertradingradio.com. Now, that show eventually somebody else bought that show's name from me, but powertradingradio.com was the show that I had. And I had started to get a pretty decent listener followship at Power Trading Radio. And we were on KFNN, Financial News Network, 1510 KFNN, your money where it matters. And you like my radio voice?
Wow.
That's what I try. But I had told people while I was on the radio show, and I said, ladies and gentlemen, I have just discovered the brand new trading strategy that will change your life. And it's a chart pattern called the red sheep in the clouds. And the red sheep in the clouds is a proprietary pattern that once you've seen it, it's impossible to unsee. When you see the red sheep in the clouds, it's going to change your life. And if you take 3 red candles combined with increased volume and a reversal pattern at the top, it's going to come down. I completely made it up to show people that what you say, like if you say it with conviction and you put a name on it, people are like, wow. And so literally I had people coming in to my center saying, I'd like to learn more about the red sheep in the clouds. Can you tell me about the red sheep in the clouds indicator? And it's because everybody's always looking for the easy way out. There is no such thing as the easy way out. Don't fall for the red sheep in the clouds.
Do the work.
Yeah, I at some level, you just got to do the work. And so I thought that was kind of fun. I found it to be rather interesting. I didn't know if I'd ever told that story to y'all or not, but don't go to the new shiny thing because it's the new shiny thing. So,
did you see Sean's question?
No, it didn't come to me, so it must have just went to you.
Oh, yeah, that's going to be a challenge when they don't come to both of us because I don't see half of yours either. So I'm not sure if he's serious or if he's joking or if he's playing along with you. But he asks, I'm serious. From the perspective of financial theory, how does the efficient market hypothesis challenge the profitability of systematically trading bull put spreads?
Oh, that's a great question.
I think he's serious.
No, he's serious. I'm sure he's serious. Because the idea is that in efficient market theory, everything known or knowable is built into the price of the stock, right? In an efficient market theory, everything known or knowable is built into the price of the stock. And so our belief in an efficient market theory is that everything we know is already built in there. And the downside of bull put spreads, right? The downside of a bull put spread is that you can have 2 standard deviations of probability on your side, and you can have a 95% probability of success. And you'll be right 95 trades out of 100 because that's the way the system is designed. The problem is, if that's all you trade and you don't have good management, the 5% of the times that you're wrong, especially in a spread, the limited ability to roll the trade makes it much, much harder to manage. I would prefer the naked put over the bull put spread most occasions so that I can roll it and adjust it and manage it a little bit better. And so I think that the efficient market theory helps those, but it also gives you a false sense of security because those black swan events can really wipe out your portfolio if all you are in spreads.
I also think that some effort in timing your entry into positions like that makes a huge difference. Because when you look at the delta of any one option to help determine the probability of an option expiring in or out of the money, that is the only information that gets plugged into that model is current price and implied volatility of that stock at that time. And so if you've got an implied volatility that is inflated, suggesting that the stock may rise or fall by, say, 40 or 50%, but the market has already fallen by a certain amount, then you look at a price chart and you look at some measure of support or demand, and you say, well, it's already fallen 25%. What are the odds that it falls another 50% from here? And so I do think that efforts in market timing and finding better entries, selling a 20 delta put after a rally in the stock is much more dangerous than selling a 20 delta put after a drop in the stock. Right? Those are, so I think it is important that market timing efforts are at least somewhat implemented in your approach, which we all do, but just to add a little to that.
Yeah, and Ian points out efficient market theory is a hypothesis, right? It is a theory and a hypothesis. And so I love it, but I think that the thing to consider is price action is going to always trump any market theory. So yeah, Liz says, completely agree. I prefer naked put options too. I only trade them on stocks I'm willing to own at my strike. If I'm assigned, then I turn around and sell calls to lower my cost basis. That's exactly right, Liz. That's exactly, I mean, Corey and I talk about that a lot. Now, sometimes I'm willing to own it at a lower strike, but then when it gets there, I'm like, nah, do I really want it? Let's roll it down and out. Like,
I like the option to change my mind.
Yeah, sometimes I'm willing to own it, but I like the option to change my mind. So,
and if you change your mind, what do you lose is my biggest, is one of my biggest analysis points is if I do change my mind, what am I going to risk if I change my mind at that point versus just taking it?
Yeah. I'll tell you one thing I do like to do is take a look at things that are fundamentally strong in an uptrend that are right now very low priced that could give me a pop later on. And I missed this one. I'll tell you. I missed this one when it popped from like 3 or 4 up to 7. But this one's an interesting one. DTST earnings are coming up, so don't do it now. But I think that this one, when I looked at, and I like to pay attention to the fundamentals, and you guys know that on the fundamentals, I typically will use Investors Business Daily, IBD, just to kind of get a quick fundamental score. It's got a 98 composite rating overall. It's in a very strong industry group, and it's recently popped straight up. And you say, well, it's already gone up 100%. It's still only $7 a share. Like, these are I like flyers like this. We've had a couple of these over the last few years that I can think of a few that have been pretty effective. And so this may be one to pay attention to and kind of put this on your radar screen. I don't even know. I've not even looked at any of the options available on this. I don't even know if it is optionable. I did it no, it's got no option. So it's a stock play only. So wait till after earnings. But if that happens, that you get that bit of a pullback, I like stocks. I sometimes like stocks like this that are strong fundamentally, very low price stocks, and I'm willing to, buy a couple of 100 shares and see what the heck happens to it. Because a stock like this, like at one point, NVIDIA was a $7 stock. I'm not saying that this is NVIDIA, but sometimes it's worth taking a flyer on some of these lower price things that I'm okay if it doesn't go taking off and go anywhere. And, you buy a couple of 100 shares and you put a stop fairly close. And if it drops below $5, I'll risk that. So I think that's an interesting one for those of you that like things like that. All right. Yes. Liz says, let's put the profits to buy higher end bourbon bottles. I love this plan, Liz. I love this plan. Mm-hmm. I could take a bottle of Whistle Pig Glass Boss Hog. That's the next one on my list. I got to come up and visit you. You got a bottle sitting there for me, and my plans got all messed up over holiday. I was going to go visit you up in beautiful Kentucky. We need to do bourbon country, Corey.
Yeah, I might actually be in Kentucky later in the year, actually. My son's playing a festival out that way, I think.
Traders Army Bourbon Trail. I love this idea.
Mm-hmm. Mm-hmm.
Where's he playing? Is it in Louisville?
I don't know where the festival is. I gotta double check.
All right. Well, you got to let me know. The Traders Army Bourbon Tour has got to happen. So, all right. What other? Come on, questions. Anybody got anything they want to put in the chat? Because I got the trade room tomorrow morning that I will come in and do some live some sessions on. But I wanted to make sure that we answer questions anybody had in there today.
It is Louisville, Highland Festival grounds.
Oh, when is it?
September.
That's a good time.
His band is playing on the night that Slayer headlines. So, in case you're interested.
Well, I've been known to listen to a little Slayer. No, I haven't. But I'll go. That's awesome. All right. Well, Ian, Corey, do you have any more questions left on your side of the aisle?
No, I don't have any questions. Over here, no one gave me anything. I'm looking at YouTube. Doesn't look like anybody has any questions over there either.
Any stocks or anything you guys want us to review?
Hold on. I do. I just have one come in.
Woohoo.
What price do institutions jump in? From RL or RI? I'm not sure. What price do institutions jump in? No, are you talking about a specific stock, I would wonder, or are you just talking about in general?
RI is Ruby Tuesday, so they're definitely not talking about RI. So when institutions jump in, we never will know, right? But we can know where they have jumped in the past for certain, right? So if I'm using let's use RL as an example, because you said that was one that was in there. Looking at this, where do the institutions jump in? Well, I mean, I can look at the volume to tell me where the highest volume was, but I'm telling you it's going to be right at the earnings, right? Whoop, no surprise there. But our volume has gone up substantially on a couple of occasions since the earnings, right? And then we're on this big gap down. So remember, every volume means that there was both a buyer and a seller, right? That's the thing to remember about volume. The story that I use, you guys ever see did you ever see Trading Places? Sell at 142. And then they start waving their tickets, and once they fill an order, they throw it on the ground. The orders that are on the ground, that's volume, right? Because somebody filled it, somebody bought it, somebody sold it. The order's been filled, it goes on the ground. So for every buyer, there has to be a seller. For every seller, there has to be a buyer. In order for those two things to transpire, that's where you have a lot of volume. So the question really then becomes, we know that a lot of institutional orders had to come into play here, but they came into play there because of the news. We also know that on this day here, there was a lot of institutional orders that came in. But the orders that were left behind, well, we gapped down. So there were a bunch of sell orders. Those sell orders that were left behind, when those sell orders got filled, we know that those sellers got filled because we traded through there. So I can't think of any unfilled orders that are left here. I can only look for orders that have been added to the queue. And so that's where we can start to look at things like indicators are very big on that, right? I mean, you've got a 50-day moving average down here and a 20-day moving average right here. It's a very well-known fact that institutional orders are oftentimes piled up at 50-day moving averages. It becomes an algorithm that just tracks the moving average, that as price comes into there, that's where the buy order is triggered. And that's why a lot of times these moving averages act as dynamic trend lines. You'll see that the more you look at some of these stocks that, I mean, they just bounce off the 20 like it's going out of style. I mean, the spiders just bounce off the 20 like it's a freaking trampoline. Because there's enough computers that say, oh, look, we're at the 20. Let's start acquiring stock. And once they acquire so much that there's nobody left to sell, the price then goes up. So on something like Ralph Lauren, where is that area going to be? We don't know. But with the highest degree of accuracy I would have right now Theoretically, there would be some in here, but that's not a strong move away. So I wouldn't lean on that area of demand. I would be more comfortable, though, leaning on the 50-day moving average as the place where there's going to be more institutional buy orders that come in. So that's my thoughts. Corey, anything else?
No, you got it. And then just to follow up, they did write in, it was more in general, not for Ralph Lauren specifically.
Okay.
So it was more in general.
Yeah. So in general, I mean, we're never going to know where the orders are placed. I tell a story one time, and I don't know that I've told this story in a while, but I tell the story about a guy that I met with that ran a trading floor in Indonesia. It was it was called Kresna Securities, and he was telling me, let me see if I can't do this here. Let me move this over. There we go. Give me something to work on. So he showed me a picture of a chart, and the picture that he showed me looked something like this. So you had a stock that was hovering like this, right? And then it did this, right? And he said, and now, by the way, Kresna at the time was the number 2 broker dealer in all of Indonesia. And this was a silver mining company. And in this silver mining company, he said, nobody is going to know that I bought right here. He said, I caused that move. And I said, what do you mean I caused that move? He goes, I decided that at that price, I was going to buy. And I remember him telling me this story. And this was actually, I really, really enjoyed it because it was very eye-opening to me. And he said that he bought down here. I said, okay, so tell me more about that area that you bought. Now, that area that he bought, he said that he was willing to buy somewhere between 10 and 11 US dollars per share, right? He was willing to buy somewhere between 10 and 11 US dollars per share. And the chart, when he showed it to me, was at about $17 a share. So the stock had gone from 10 all the way up to about 17. And he said, you cannot time the markets. He said, you can't time the markets because I have enough buying power to know that I want this stock down here. So I said, okay, let me ask you this, because it was a really interesting conversation. I said, what made you want to buy the stock? And he talked all about how they had hired mine engineers to go down and look at the mine, and they had found this vein of silver that the company had not previously been able to find. The brokerage company helped to pay for some of these mine engineers to go out and help them, and they found that vein of silver. And so they started buying once they found that vein of silver, right? And that was his trigger to buy. So we are never going to have that kind of knowledge, right? We're never going to know that's going to happen. So I asked him an important question. I said, okay, let me ask you this. So you wanted to buy between 10 and 11. What size of a position did you guys want to get? He said, well, we wanted to pick up about 1.5 million shares. It's a lot of shares, right? I said, okay, how many did you get? He said, we got not quite that many. He said, we got about half that. I said, okay, so you got about 750,000 shares. You wanted to get 1 million. He goes, yeah. I said, are you still buying? He said, no, I'm not buying. I said, why aren't you buying now? He said, because it's not worth what it's where it is right now. I said, when are you going to buy again? He goes, when it goes back to 10 or 11. I said, so how much more are you going to buy? He goes, the rest of our allocation for our risk, the other 750,000 shares. I said, okay, so what you're telling me is no one's ever going to know. No one is ever going to know that you're buying down here. No one's ever going to know that you're buying down here. But when you did do the buying, price went up because a lot of your shares became unfilled. And those unfilled orders might still get filled in here. He goes, why would you show people that? Don't tell them that.
I love that story.
That was one of my favorite stories of all time because this guy was a total non-believer in technical analysis. Like he was a fundamental. He was a fundamental trader that traded in gigantic blocks on the fundamentals of the company. And his point was, you're never going to know what I know, and you're never going to have the money that I have. And my point is, I don't need it. I don't need to know where you clear the path. I just need to know when you come back to the path or where you started the path. So hopefully that helps to answer your question. We're never going to know, but they do. Now, do I think that there's years later, if the stock never comes back, do I think that those orders stay unfilled for years and years and years? No, I think that eventually those orders get canceled. And I'm not a believer that an order that's 12 years ago stays on the books. Maybe it did a long time ago, because that's one of the things that I heard. John Rowland, he's with barchart.com now, but John Rowland said that when he was on the floor of, I think it was the NYMEX, he would go back years in the books and he would fill orders that were 10 and 15 years old, but they were physical paper orders. And I just don't think those are there anymore.
Yeah, I don't think those are going to be there. I would agree with that, Chuck. But I do think that there is a sense of, oh wait, prices have not been back to 10 and 11 in 20 years. I still think there could be some attraction to getting back in at a price that we haven't seen in such a long time, especially since the last time we were there, price did rally so sharply. So, but I think they are going to be new orders coming in, not the ones from 1989.
Yeah. I mean, if there are orders from 1989, that's impressive. So
yeah. I had one of my mentors, Chuck, similar story from a person who just didn't believe in technical analysis for a moment. It was the owner. I don't know if he was an owner of a company. He probably was the owner of one of the company, but one of my mentors was telling me a story where one of the guys on his trading floor was talking about, when price gets down to here, we're going to be a buyer because this is where price has been previously supported in the past. And that means that buy orders are going to come in and push prices higher. So we're going to be a buyer at this support level. And he's like, wait a second. You're telling me because there's a line on your chart where prices bounced before, that's where prices always going to bounce? And he's like, well, maybe not, probably not always, but that's what we're expecting this time. He's like, what if I put in a huge sell order at that exact price? He's like, well, how huge? He's like, it probably isn't going to do anything. And he's like, put in a sell order of whatever the magnitude is, and price blew right through it. And he's like, so it doesn't work all the time? And he's like, no, I guess not. So like the idea that something's going to work all the time, and how could price have blown through that particular level? You never know the reason why a price necessarily blows through a particular level, other than there could be just a large order on the other side trying to prove a damn point in that particular case. But the idea behind technical analysis and support, resistance, indicators, oscillators, supply and demand, all that is just, it's an edge that more times than not, it'll work. And when it doesn't, you better have a plan for when it doesn't.
Yep.
Speaking of when it doesn't, what are your thoughts on UNG in general? Question came in. And also, Raphael is back with the question of any update regarding VWAP and Bookmap. Now, Bookmap is just a futures trading platform. I don't really know that we looked into that as much. We don't necessarily use Bookmap to trade futures, but VWAP was a question, came up again. And then also, what are your thoughts on UNG in general?
My thoughts on, did I hear that, did I hear that there's a chance of rebalancing UNG in order to make sure that it stays viable?
Doesn't go to zero?
That it doesn't go to zero. I've heard that on a couple of occasions, and I don't know if that's very accurate, but UNG is, the question is really, UNG is what's going to happen with natural gas, right? And if you just look at natural gas, well, we've gapped up today on a new contract rollover, right?
Mm-hmm.
But just looking at natural gas, the dang thing has gone so far down. And today's rollover gap isn't a real gap, right? If I put the NGK24, we don't really have a gap. So the question, I guess, becomes is how far can natural gas go down? The problem is that natural gas, like when oil went to below zero, it was because we had so much oil, we had to pay to store it. You never have to pay to store natural gas. You can just burn it off. And so can natural gas go to zero? Probably not, because they're gonna burn enough of it off that it never goes to zero. But can it get pretty damn close? Absolutely. And my problem, once again, now I'm gonna put my tinfoil hat on for a minute, if you guys are all right with that. My problem with natural gas right now is I think that natural gas is being artificially manipulated in order to I think that the price of natural gas is being artificially manipulated as a way to flex our geopolitical muscles with other countries that have a lot of excess natural gas. Maybe countries that like vodka. I'm just saying. Right? I don't know if that's the truth. I don't know that, but that's what I think is happening. And so I like nat gas for a day trading vehicle. I think nat gas is a great day trading vehicle, especially when you trade the gap and go setups when they show up. I don't know that I'm trading this on the gap and go, because this is not a great example of what I would want to do on the gap and go on the contract rollover, because that's not really a gap. But if we've got a normal Sunday night gap in a direction of the predominant trend, man, this is a great day trading vehicle. But for UNG itself, it just scares the pants off of me. It really does.
Seems like it's stabilized around just under 15 a little bit. It's trying to, but we'll see if that
looks to me like it's
triangle.
Got looks to me like that descending triangle is saying
it might.
So all right, I did take a look at VWAP a little bit. And so I didn't spend a tremendous amount of time, but I will tell you, I had frankly never even heard of VWAP until last week. But you told me to take a look at it, and so I spent a little bit of time taking a look at VWAP. VWAP is our volume weighted average price, and the volume weighted average price is giving me my 2 standard deviations over a specific daily time frame. Now, if I'm using VWAP on a daily chart, it's not very useful. VWAP on a daily chart is better if I'm going to be day trading. So let's look at Apple for a minute. And let's say that I was day trading Apple. And what this really does is it takes a 2 standard deviation volume price of 2 standard deviations above and beyond the average price combined with the average volume. But once again, you'll see that my VWAP number here is 170.86 on a 15-minute chart. If I go to the hourly chart, my VWAP is 170.86. If I go to the 1-minute chart, my VWAP is 170.86. And the reason for that is because my VWAP is set to a time frame independent of my chart time frame. So the VWAP is calculated based upon a chart time frame independent of a time frame independent of the chart time frame. Now, it shows 2 standard deviations above and beyond the volume weighted average pricing. And so if you're going to swing trade, VWAP is probably best to look at the weekly VWAP on a daily chart. So you have it as a daily chart on a volume weighted average pricing. And what you're really looking for, I think, are especially if you're day trading, is are they going to be good targets? I don't know that it's what Liz literally just typed it in. I don't know that they make for great entries, but I think they make very good targets if they're combined with areas of demand or supply. So let's just say theoretically, using Apple for a moment. Let's say tomorrow that we see Apple gap up into this region here, and that's a really nice area of supply. We then become overextended in our VWAP, and then this area here becomes a target for the reversal to come back down. So when I look at VWAP, I think what it makes the most sense for is a target on extreme areas of supply and demand, regressing back to more of a mean. That is probably the best use for it from what I've looked at. I don't
kind of another version of a Bollinger Band almost.
Yeah, it does. A Bollinger Band just takes the 20-day moving average.
Yeah.
This takes the volume weighted average price.
But the strategy I'm talking around using bands and extreme deviations away from the average.
Yep. Now, the larger I go with my VWAP measurement, the wider my bands will become, right? I'm using the monthly one now. And if you look at the monthly, it kind of hovers inside of those 2 standard deviation VWAPs here on the monthly, utilizing the daily chart. And so there it might act as a bit of a reversion to the mean. I don't love it, and here's why. There's too many variables to adjust. See, the reason the 20, the 50, and the 200-day moving average work is because a lot of people use the same ones. Volume weighted average price, enough people have to be looking at the same settings, right, in order for those things to be as relevant, right? They work because a lot of people use them in the same way. And that's what I think that where I think they get most valuable. And so like I said, not an expert in it. It's not my normal trading style, but I think it does have some validity for a target, but not necessarily for an entry. So, Raphael, thanks for coming back and watching tonight. I hope that answers your question a little bit. So, all right, Corey, if that I think that's all I've got from a question standpoint. So I've got a live trade room tomorrow morning at 7:00 my time, 7:00 Central, 8:00 Eastern. So I'm going to jump back on tomorrow morning. If anybody wants to go to TradersArmy.com, become a member, we'd love to have you join us. You can use the promo code Trader60, get a little cutty cut off your first month's subscription. And so take a look at us, see if there's something you want to do. But until was it 2 weeks? We do this every other week, so we'll see y'all in 2 weeks again. It's nice to hang out with Corey and I and have a little drink. So, Slanja, cheers. Good night.
Always. Cheers, everyone. Have a good one.
Give my best to Ryan. See you guys.
Do. Awesome, guys. Be good.